In this video, I'm going to share with you some perspective on return of premium products. I had, a viewer ask me this question: is R.O.P a good thing to sell and position to clients? Well, I'm going to answer that question for him and also for you, the viewer. So, by the way, thank you for asking this question. We're going to talk about the pros. We're going to talk about the cons. I'm going to give you some of my perspective so that you can help clients be better positioned to meet their needs with insurance. That's what this is all about. But before I address this, JasonFinalExpense.com. I run a national insurance agency. I partner, I coach, and I recruit agents across the nation to join together and partner and sell life insurance, Medicare insurance, even annuities, face-to-face, and yes, in the telespace. If you need help, reach out, JasonFinalExpense.com. But a lot of agents will ask this question to me, so we're going to address it. Is return of premium a great product to push or to propel your career with? And let's just kind of get under the hood of this vehicle and figure out what's making it tick. A return of premium product is a term product which is temporary in nature, right? So we don't put, temporary solutions in place for a long-term problem. A term insurance vehicle is great for a short-term product, hence the name term. So a lot of folks will sell return of premium products to folks that are trying to pay off a mortgage or a big debt that is kind of long-standing. And they're like, hey, let's sell you this R.O.P return of premium so that the money that you give the insurance company will then come back to you in, let's say, 20 years. Well, that's great in theory, but anyone in the insurance industry knows that, let's just face it, let's break it down, these sweet people do not keep this product long term. The insurance companies know this, and they drop it like a hot potato about a couple years in, Anything that comes in the form of bills, Christmas, a loss of the job, their car insurance goes up, the dog ate their lunch, you know what I mean. If you're in insurance, that the most expensive thing goes, when they have a tough time financially, the R.O.P product is laden with price, If you just sold a traditional term product, same death benefit, to the client, it could be a third less, Sometimes even, more, advantageous to the consumer than even that. So when you sell an R.O.P product, it's padded with pricing. The premium is padded hard so that in 20 years, if the client keeps paying it, which most insurance companies know they aren't, that the house wins, If they don't pay the premium for the full 20 years of the return of premium plan, let me tell you, the insurance company wins. The house wins. You walk away, with your tail between your legs. So it's a good product for someone that is very disciplined and keeps their policy long term. But let's face it, hardly anybody does that, Even insurance agents may not keep their own policy for 20 years, right? You just don't. And when a product is overpriced compared to its competitors that are selling the exact same death benefit for a fraction of the premium, let me tell you, all it takes when you sell a return of premium product to a client is an agent from anywhere else that comes in and, in essence, undermines that really fat premium and says, listen, Mrs. Johnson, most folks don't keep this policy for 20 years, and you're paying, let's say, $300 a month for blankety blank thousands of dollars, and if I could get you the same death benefit and leave your money in your pocket, where it belongs, guess what? Let's do the math real quick. I can save you hundreds of dollars a month and give you the exact same death benefit, or even maybe more, depending how healthy they are. So if you can put the client in the same position or a better position for way less premium, let me tell you, the sizzle to that steak may be great when you're selling their R.O.P product, but the moment you leave that house, the sizzle goes away, and then any other salesman can come in and take that client just by putting it into a perspective of so what. So what this means for you, Mrs. Johnson, is that if you keep this return of premium product over the course of the next 20 years, you will win. You'll get your money back, That's great. But if for any reason you don't continue your premiums for the full 20, the house wins. Now, do you think that there may ever become an event that you can't afford to pay this premium long term when it's costing you $300 a month for a great product, but it's overpriced because they're pricing the fact that the R.O.P is coming back to you, the consumer. Is this really what you want? Or would you rather save this amount of money, okay, and actually put that extra money towards your car payment, or put that extra money to your kids, or buying shoes, or Christmas, or whatever it is that the client wants to use their money for, the so what? A lot of clients will have more value in having a more premium, okay, pleasurable product, so that they don't have to put out as much every month. And let me tell you, clients can become cheap, and there's nothing wrong with that. So what does this do for them? R.O.P is great for the agent, not great for the consumer, because most people don't keep the product long term. They just don't. I've done insurance and I've done telesales. My goodness, I've done both a combined 20 plus years, 2 decades. And let me tell you, the amount of people that keep a policy for 20 years, even 15 years, is rare. The insurance companies know it. If you sold a great insurance policy, great. But I'm telling you, there's term insurance, okay, out there on the market right now that could replace, and I'm a broker, could replace the policy that I even wrote for myself 7 years back, because some new companies come to trot, and if you're healthy, wow, their rates are just phenomenal, because the insurability tables, the mortality tables have elongated. People are living longer, so therefore you pay less for your insurance. So is the R.O.P a great product? Of course it is for the right consumer, but is it a product that has some hiccups? Absolutely it does. So just understand, R.O.P is not a bad product. Return of premium is great, but realistically, okay, you heard the old adage, buy term, invest the difference. Your client can do that, but will they? No, they won't. Okay, they really won't. Most people are not disciplined. They're not disciplined, first off, to keep their policy for 20 years, and they sure as hey will probably spend every penny that floats through their hands. They just don't have the discipline necessary to save. So for that consumer, if they're truly dedicated and know, you know what, I just can't save worth a you-know-what, then fine, do a return of premium product, because at least they know that they'll have something to show for themselves in the long game. So R.O.P is not a bad product. Just make sure you're positioning it in the client's best interest. As long as you're doing that, you're going to do great. But make sure that the premium is not too heavy, so that they drop it in later years and then don't get the benefits of what the R.O.P could offer them, the consumer. So look at it from both ways. Is the R.O.P good? Debatable. Okay, it's overpriced, especially if you're selling a company that maybe your agency pushes and it only wears maybe one color of jacket. That may be you. Okay, that R.O.P product is a little pricier maybe than some other companies out there. But it is what it is. So understand that. But R.O.P is not the cat's meow. A lot of folks push it. Yes, you're selling sizzle of the steak, but the steak gets real rough later when the client has that conversation with you and says, hey, I got to cancel it because it's just too much money. Because you're pushing a product that is premium heavy, okay, as opposed to pushing a term product that may be better for this sweet young family or someone that just bought a home and says, listen, I'll get you the same product for a third the cost. I'll take care of you. You're healthy, okay? And then why don't we get some whole life options over here? Or maybe if they want a savings account, goodness, how about you set things up? Maybe they can get a Roth. Maybe they can get a SEP IRA. Maybe they can do some things to lower their, exposure to the good old uncle and the Sam at the end of the year that will allow them to be able to have duality of flows, okay? So at least if they dropped the term insurance and they were establishing a SEP IRA, their money, at least they wouldn't lose everything, where when you do a R.O.P product for 20 years, they could have paid on it for 10, 15 years and they quit paying on it. What's the client going to get? Probably Jack Diddley and a whole lot of squats. So I hope this gives you some perspective on R.O.P. Are they bad? Absolutely not. They're a great product for the right person, the right prospect. They're an amazing product. So nothing disparaging about R.O.Ps. They're great. But understand that they're an overpriced term product if the client does not really, and I mean really, intend on keeping this product for the length of the term, and most don't, okay? But if they're disciplined to do that, great. But if that family needs extra living money, okay, extra book money for their kids' colleges or gas money when prices of gas are rising, let me tell you, if they're going to choose between filling up their gas tank or paying additional money every month, that R.O.P product, let me tell you, the gas tank wins. Hope this helps you. If you need anything at all, reach out, jasonfinalexpense.com. Thanks for watching. Have an amazing day.